A recession seems very likely. To help you weather the upcoming storm, I thought it would be useful to share some words of wisdom with you from the Oracle of Omaha. First, regarding the recession, the risk of a recession in the next 12 months has risen dramatically to 44%, a level only seen right before or during real recessions, according to economists polled by the Wall Street Journal. Now on to the meat of the video. Here are 7 pieces of recession-related advice from Warren Buffett to help you remain calm and think clearly should the recession happen. Buffett advice number 1. American business, and consequently a basket of stocks, is virtually certain to be worth far more in the years ahead. Innovation, productivity gains, entrepreneurial spirit, and an abundance of capital will see to that. Ever-present naysayers may prosper by marketing their gloomy forecasts, but heaven help them if they act on the nonsense they peddle. Many companies, of course, will fall behind and some will fail. Winnowing of that sort is a product of market dynamism. Moreover, the years ahead will occasionally deliver major market declines, even panics, that will affect virtually all stocks. During such crazy periods, you should never forget 2 things. First, widespread fear is your friend as an investor because it serves up bargain purchases. Second, personal fear is your enemy. It will also be unwarranted. Investors who avoid high and unnecessary costs and simply sit for an extended period with a collection of large, conservatively financed American businesses will almost certainly do well. Buffett advice number 2. If you're going to be a net buyer of stocks in the future, you are hurt when stocks rise. You benefit when stocks swoon. Emotions, however, too often complicate the matter. Most people, including those who will be buyers in the future, take comfort in seeing stock prices advance. These shareholders resemble a commuter who rejoices after the price of gas increases, simply because his tank contains a day's supply. Buffett advice number 3. Over the long term, the stock market news will be good. In the 20th century, the United States endured 2 world wars and other traumatic and expensive military conflicts, the Depression, a dozen or so recessions and financial panics, oil shocks, a flu epidemic, and the resignation of a disgraced president. Yet the Dow rose from 66 to 11,497. Buffett advice number 4. Investors are in a game that is heavily stacked in their favor. Charlie and I believe it's a terrible mistake to try and dance in and out of it based upon the turn of tarot cards, the prediction of experts, or the ebb and flow of business activity. The risks of being out of the game are huge compared to the risks of being in it. Buffett advice number 5. Bad news is an investor's best friend. It lets you buy a slice of Americans' future at a marked down price. Buffett advice number 6. Today, people who hold cash equivalents feel comfortable. They shouldn't. They've opted for a terrible long-term asset, one that pays virtually nothing and is certain to depreciate in value. Equities will almost certainly outperform cash over the next decade, probably by a substantial degree. Those investors who cling now to cash are betting they can efficiently time their move away from it later. In waiting for the comfort of good news, they are ignoring Wayne Gretzky's advice. I skate to where the puck is going to be, not where it has been. Buffett advice number 7. Be fearful when others are greedy, and greedy when others are fearful. And most certainly, fear is now widespread, gripping even seasoned investors. But fears regarding the long-term prosperity of the nation's many sound companies make no sense. These businesses will indeed suffer earnings hiccups, as they always have, but major companies will be setting new profit records 5, 10, and 20 years from now. Let me be clear on one point. I can't predict the short-term movements of the stock market. I haven't the faintest idea as to whether stocks will be higher or lower a month or a year from now. What is likely, however, is that the market will move higher well before either sentiment or the economy turns up. So if you wait for the robins, spring will be over. So those were 7 direct quotes from Mr. Buffett. The main takeaways I heard were: stay calm, the bad times will be temporary. Don't sell and move into cash because prices have fallen. Don't try and dance in and out of stocks on a daily basis. You want to own US stocks. In the long run, they always increase in value. Prices falling in the short term is a good thing. Stocks can be purchased at a discount. And keeping your head about you in turbulent times will pay off greatly in the future. Thanks for watching. Please punch the like button below if you thought this was valuable, and I'll see you guys in the next video.